Last week was an epic time to be a trader. The BOJ, FOMC, BOE, and NFP drove massive global participation. This week's going to be different. Let's take a look at the top 3 trades for week 45. We don't have a blockbuster economic calendar to work with this week, but that doesn't mean that we can't make a few bucks. It's times like these where we have an opportunity to trade true, unfettered price action. Now I'm looking forward to week 45, specifically the commodity markets. These 3 opportunities head up the list: the RBA Interest Rate Decision, the EIA Inventory Report, and the WASDE.
The action begins Tuesday with the Reserve Bank of Australia's interest rate decision. Under new Governor Michelle Bullock, the RBA has pulled back on its hawkish policies of 2022 and early 2023. We expect Bullock and the RBA to hold rates firm at 4.10%, taking the data-dependent path. This move will make Australia a global dove and could send the Aussie lower. On Tuesday, we're going to be focused on the Australian dollar, US dollar. What you're looking at here is our tri-screen trader approach. We have our support and resistance levels, our pattern finder, and our risk manager. On Tuesday, in the aftermath of the RBA, you're going to want to have your Australian dollar on all 3. We're going to be looking at support and resistance levels, and we're going to be looking for patterns that show up in that Aussie USD. We're going to be looking for buy signals from the support zone and sell signals from a resistance zone. If we get those, we can plug a trade idea into our risk manager and execute a trade accordingly. Now, from a more practical standpoint, what we have here is a very basic outlook for the Aussie. You've got 2022's low, 61.69, a potential bidding opportunity. You've also got the high right back here from June and the yearly low, and we've got a 38% retracement sell right around 65 and a 62% retracement sell right up around 66.58. So that's a quick outlook at the Aussie. No matter how quiet a week may be, there's always the EIA Inventories Report and crude oil to trade. Not this week. For the first time that I can remember, the EIA is to delay their scheduled weekly crude oil and natural gas supply numbers until the following week. The biggest event on Wednesday is the one that is not going to happen. Be ready for a hyperactive crude oil market as traders attempt to price Middle East conflicts and the phantom supply numbers. U.S. oil is going to be in play Wednesday. Even though we don't have an EIA number, there's still a lot of meat on the bone. Israel-Hamas war could send the market any number of ways. Fall seasonality typically says we're going to see a sell-off. For me, I'm looking to bid dips. And when we take a look at our monthly, we've got a nice spike low there. We've got a spike high here, and we've got a 62% retracement right around 75.60 and also a 78% retracement at 70.33. If the dollar ticks higher, we could easily get a test of these levels. We just have to wait and see how the trade develops. I'm not really interested in selling right now. I'd much rather buy a nice dip. We could get it this week. It's good to be able to trade a multitude of assets. This skill can help us find opportunities when there are no market drivers and price action is quiet. That's the plan for Thursday. We'll be looking at the World Agricultural Supply and Demand Estimates, the WASDE report from the U.S. Department of Agriculture. And what better ag product to look at than corn? In October, the WASDE revised the U.S. and global corn outlook downward. This should have driven prices higher. It did the opposite. Now the U.S. harvest is in, and we'll get some concrete projections from the USDA. All right, let's trade it. Okay, we're going to be looking at our cash corn market. Now, to find this contract, you're going to type corn up into your search bar on your TradingView platform, and you're going to go right down to that Pepperstone corn cash. Now, as you can see, this market has been an absolute free fall. The trend is bearish, and it's long-term bearish. No matter what the fundies, it seems like price definitely falls. Now, when a market trends, and it trends either to the bull or to the bear, we're looking for big round numbers to be areas of natural resistance or support. In this case, our big round numbers are going to be support and potential bid opportunities. We've got 4.5, 4.25, and 4. Those are the numbers I'm watching. Bidding opportunity at 4.5, bidding opportunity at 4.25, and bidding opportunity from 4. Just depends on where that WASDE comes in. Right now, we have no reason to believe the market's going to reverse. We're going to be watching those big round numbers for potential bidding opportunities. All right, it's quiz time, sponsored by Switch Markets. The first 5 people to correctly answer this question will get free access to the How to Trade trading room. Are you ready? Here we go. Who is the governor of the Bank of Japan? Is it A, Shinzo Abe, B, Haruhiko Kuroda, or C, Kazuo Ueda? Leave your answers in the comments section below. Good luck.
The upcoming 5 days on the markets feature very few headline events. Of course, that's usually when all hell breaks loose. It'll pay to be ready for anything. Be patient and nail your trade locations. If you do those 2 things, profitability will take care of itself. Now, you're looking for a broker? Check out a free demo at Switch Markets and participate in a few of our TST streams. Subscribe to our channel and never miss a weekly preview, a live event such as NFP or FOMC Live. All right, that's it from here. We'll see you on the next one.